So guys, today we'll be talking about liquidity void. Now what is the liquidity void? This is a liquidity void. Look at it here. From these big movements, this is a liquidity void. When price will start dropping for no reason or basically because of a fundamental release of news, all these are liquidity void. You can see it. So no need telling you a liquidity void is this or that. Once you see unexpected spike from the market, especially being caused by the news, all these are liquidity void, or you can call it liquidity pool. So in this video, I will show you. This video will be short, so I will be able to show you how to trade liquidity pool and liquidity void. Now basically what really caused this particular pool let me say our CPI, NFP, or PPI or FTMO, yeah, and the any news released by Donald Trump. This particular pool is being created by those fundamental aspects. You need to learn your fundamental analysis for you to be able to identify all those areas. If you can be able to identify them, then you will know when this liquidity void is going to be released in the market. Your job here is to identify the void and trade them. I'm going to show you how to trade liquidity void right now. Now the first thing for you to do is identify that particular void. If this is the void here, now for example, price is creating its candlestick on a normal day, enjoying his day, and all of a sudden they release the CPI news and a very long spike happened in the market. This particular long candlestick is what we call our liquidity void. And for you to be able to trade this liquidity void, because it is seen and expected in every liquidity void, the price will surely trade down to the 50% of that liquidity void. Your job here is to identify when price is ready to go down to this 50%, or to wait for it at this 50% before doing what? Moving to the upside. Now, liquidity void can not only be caused by fundamental analysis, it can mainly be caused by when there's a too much price order, and instead of price to create a order block or fair value gap or show a aspects whereby smart money are in the market, price will just be selling. Let me show you an example of that particular movement. This is an example of it, because this was not caused by any news in the market, but after the London Open, price starts dropping. This is a liquidity void, because and surely price will trade to the 50% of it. Your own is to identify that 50%. Once you see the 50%, then you start looking for your entries. Now, this is our 50% from it. From here down here is our 50%. And price did was enter into this 50%. All you need to do is to identify your entries. If you can be able to identify your entry from the 50%, then you will be making profit from it. Now, let me show you example of a bearish liquidity void and a bullish liquidity void. Ladies and gentlemen, this is our bullish liquidity void. This void was caused by news. Exactly, no, 2030, yeah, was caused by FCMO, I think, yeah. So after seeing this particular liquidity void, it's expected for price to trade in between the 50%. You can follow price, just wait for a change of character with the 5-minute time frame down. You can follow price to this particular area, or you wait for price to land into here first before you're able to do anything you want to do in this liquidity void. You can only be trading liquidity void as your strategy, which means by only waiting for price to always create a liquidity void, and then you go there and be looking for your entry. With such doing, you will be able to create a strong portfolio. Now, after price creating this liquidity void, as we see, let's mark our 2. We are marking from here up to here, and we are expecting to sell from here if we have any entry model. So let's watch. Now this should be our entry model, because you can see this is our double bottom, and in a double bottom, this is our neckline. Price broke out this neckline already and leaving out a traces, which is our FVG. This is our FVG here. From here to here is our FVG. So we just need, after seeing this particular instance, let's just, because our FVG is our entry, let's just stack in our entry, and our stop loss should be not bigger than 10 pips, and our SL should be, let's target this high, or 1:2. 1:2 is okay for us. Now this will be our entry, trading this particular liquidity void. This is all we need from the market while trading this particular liquidity void. Eventually we are in, and price almost to our TP level. Yeah, almost at TP level, and we are out instantly without any further restriction. We just traded this liquidity void and we make our cool cash from it. Let's see if we can see any other liquidity void. I'm going to show you how to counter trade. Yeah, let me show you that, how to counter trade. That if you see this, if you see any liquidity void, how to counter trade down to the 50%. Let me show you that before I end this video. Now looking at this particular liquidity void, this is being caused by what again? By news. I think this should be all these USD PPI, all this news, or USD PMI that usually happen by 3 o'clock. Some of them cause this particular liquidity void. After seeing this particular liquidity void, now it is expected for price to trade to the 50% of it from year to year. Yes, price needs to trade down to this 50% of it. So now, if you want to counter trade, which means by trading from this particular area down to your main point of interest, that is counter trade. Because if you place your order block, for example, you are trading the 4-hour time frame and price is in this particular area, this is your point of interest, and price is in this particular area. Price is in this particular area. You can counter trade this particular market down to your point of interest before you enter the main entry. You understand that, guys? So now the same thing goes to this particular order liquidity void. We are going to counter trade this down to this 50% before we are going to buy. You understand? So let's see what we got from the market. First of all, after seeing this particular thing, we are looking for our entry model always. From our entry model, we just need a break of structure to the downside. Then that is just it. This is our break of structure, and this break of structure is to the downside. And after seeing this, let's call it our change of character, not break of structure, because the last time we checked, this is our change of character here, our break of structure here to the upside. And after seeing this, is our break of structure, our change of character to the downside. So after seeing this, our FVG as our entry point. Remember, FVG is our entry point. If this FVG should be our entry point, yes, so then that would be our entry. Remember, we're counter trading, and the probability that price is going to respect our counter trade 70%, but the probability that price is going to respect our main point of interest 90%. So we are selling down to the 50% of this liquidity void. So we are selling down here. So probably if this is the 50%, let's mark the 50% of the 50%. Okay, this should be this should be our 50% of the 50%. That should be our TP level. 1:5 risk to reward ratio. Sniper entry. And boom, price gave us a take of profit. A counter trade down to our take profit. Now what we'll be expecting here is a break of structure or a change of character to the upside. That yes, we are already in a 50%. Now let's trade the main reason why we're trading this. Let's trade our main change of character. Let's trade our main order liquidity void to the upside. We have our break of structure. This is it here, our break of structure to the upside. This will be our entry. I'll enter for this FVG if you want, but since we're already in a TP of this level, we're just risking more in this particular side. We'll be risking more here, or be risking small, not more, small from that particular area. This is also a liquidity void. So this small movement now is also a liquidity void caused by news, but a tiny news. So let's just wait to see if price will respect us from here. The price should not respect us and keep on going to the upside. Miss Miller. So as you can see, price expected us from here, from this place. Price expected us and tag us in and keep on pushing to the upside and taking us to take profit. So this is how to trade liquidity void, as easy as that. Go and implement this in your trading.